Well, as was previously said, I'm a sophomore. My name is Kyle Harmon. I'm a business analysis and accounting double major here at Grove City, and it is my absolute pleasure to introduce today's speaker, Mr. Don Houk. Mr. Houk is an entrepreneur and technology leader with over 20 years of experience in the IT industry. He's the founder of Next 7 IT, a managed service firm based in Cranberry Township that he grew from a one-person operation into a team of 26 serving small and mid-sized organizations across the region. Through disciplined process, proactive solutions, and a strong commitment to clients, Mr. Houk led Next 7 to sustained growth and ultimately to a successful sale. Mr. Houk earned his bachelor's degree in business management in 2003 and recently completed his MBA here in 2025. His academic and professional experience have helped him to develop deep insight into scaling operations, leadership, and strategic decision-making. Today, Mr. Houk will be sharing practical guidance on creating, growing, exiting a business on your own terms. He will highlight key principles such as vision, grit, financial clarity, and disciplined process, principles that apply not only to aspiring entrepreneurs, but to anyone hoping to grow, lead, or influence well in their career. Please join me in welcoming Mr. Don Houk.
Thank you, Kyle. Appreciate the introduction and the warm welcome. As a two-time graduate of Grove City College, it's my honor to be able to talk with you all today. Let's begin with prayer. Thank you, God, for this time here together at Grove City College. Thank you for the school and the faculty as they are a beacon of light in a world desperately in need of faith and freedom. While we talk about starting, growing, and selling a small business, we do so with the context that we are here for a short period of time compared to the expanse of eternity. And we know that regardless of our profession, the ultimate source of wisdom and truth is found in you. Amen. So I'm going to share with you my 15-year journey starting and selling a small business in the IT industry, including some of the lessons that I learned along the way, sometimes the hard way. And I'm not an expert in any one specific area, but I do feel like I got a broad range of experience doing a lot of things. While the focus is entrepreneurial in nature, some of the principles will apply regardless of what your career aspirations are. And we're going to start in a somewhat odd place. On a cruise ship. In December of 2009, I took a Caribbean cruise leaving from Florida. I had never been on a cruise before, so I was really excited about the possibility that you could just hop on these boats and they would take you to these beautiful destinations. But after I got on board, I began to not feel so well. Now, at first I thought, okay, I just have a little bit of seasickness. This is kind of normal, so other folks have this as well. But after a while, I realized I had the worst case of food poisoning that I'd ever had. Okay, and I was down and out for 3 days. Now, I can tell you the worst place to get food poisoning is on a cruise ship because every little back and forth of the cruise felt like a tsunami to me, okay? Now, you might think, okay, this is a bad thing, but why are we talking about it 16 years later, all right? Like, so you had a few bad days at sea. Well, it turned out this ended up being the catalyst for me to start my business. Because in those 3 days, I had no cell signal, no TV, no internet. If you're having some heart palpitations, it's going to be okay. Right? But the point was I had to stop and think. Now, when you do stop and think, this engages the default mode network in our brains. And what's that for? That engages creativity and problem solving. Now, it also can engage dealing with the problems that you might have in your life. And so this might be the part where some people get uncomfortable. In fact, they did a study in 2014 where they took a bunch of people and individually put them in these rooms by themselves. And they had nothing to do. They just had to sit there. Or they could press this button that would deliver an electric shock, a painful electric shock to them. And wouldn't you know that almost half the people chose to shock themselves rather than deal with their problems. But in reality, you do need to disconnect from your routine and disconnect from the rest of the world if you want to make some big decisions. It also gives us the opportunity to quiet our minds and seek God's guidance in what is the next step for our lives. So when was the last time you were able to do that? There's a great book called Traction by Gino Wickman. We're going to talk through a number of the concepts. It talks about having an off-site retreat for your leadership team once a year. I think we need something similar for our personal lives as well. Now, today, I don't rely on food poisoning in a cruise ship to do this. Found a better way, which is backpacking in the woods. That's me backpacking. But I mean for real disconnect on this, though, too. Not just go out to the woods and then to go surf the web. Like, that's defeating the point. Okay, but back to the cruise ship. I started planning what I wanted to do with the rest of my life. And I started thinking about my dad, who's here right now. Hi, Dad. But he started a physical therapy center. Sorry about that. He started a physical therapy center, started it, grew it, and sold it. It was mid-aid, there you go. Sold it, and I could see how he had the success along the way, some good things that occurred, and I could see some of the more difficult things around HR and people and other things. But either way, I knew it could be done. And I also had a business management degree from Grove City College, which I had never used to that point. I was mostly in the tech side of it before then. And I wanted to take advantage of that. So I got to work planning my own business. I found whatever paper I could, started furiously writing down thoughts, aspirations, goals, and plans. Started asking some questions, like, what am I going to do? Who am I going to sell to? What would I sell? Who would my customer be? And here's a good one. What does the world need but doesn't have? Because the answer to that can be a next idea that can be impactful to the world and you. Now, who here had Dr. Powell's marketing class? Do we have anyone? Oh, fantastic. What's the definition of marketing? Who knows this one? Yeah, sir, right here.
Finding out what people want and giving it to them.
Boom, right there. Find out what people want and give it to them. And this is a great concept to be thinking about as you're contemplating starting a business. So this was a time of change in the IT industry. We were going from break-fix kind of service to more managed IT services. Now, so for example, break-fix. Let's say you break a printer. I come out and fix it. You pay me an hourly rate, and everyone's happy, right? Well, you really would prefer the printer not to break to begin with. Good luck, because it's a printer. But you'd prefer that. And I only got paid when something bad happened. So that's not a great model. The better model was managed IT services, so we were paying a flat, reoccurring monthly rate. And we're going to come back to that later. Reoccurring monthly rate, that's important. And we were able to deliver additional proactive work. In addition to fixing the broken things, we're trying to spend more time being proactive rather than reactive. So I knew that if I was going to form a business, I wanted it to be around the managed and focused on managed IT services. I was also having an issue with my prior job at the time. They were making some questionable financial decisions, hiring some people that shouldn't be there, and my efforts to remediate that were, well, I was young, and why would they listen to me? So I knew that something needed to change. And as I thought back and looked at this, and there's this concept in the book Traction as well, there's really 3 ways to solve a problem. You can tolerate it, you can fix it, or you can move on from it. Now, a lot of things you have to tolerate, they are outside of your control. Okay, we're going to tolerate that. Sometimes you have to tolerate it for a little bit of time, and then you need to deal with it. Most of the time, you should probably be in fix-it mode, and this is asking the 5 whys, or as many whys as it takes, to find the root cause of something, and then deal with it, fix it. In this case, it was time for me to move on, so that's what I did. And the key point in all this is if you take the time to disconnect from the world, disconnect from your routine, do all this planning and session, you got to execute it. Does not matter unless you do something about it. So in January of 2010, I started Houk Consulting LLC, which turned into Next 7 IT later on. So I'd recommend for you, carve out some personal time, not to just consume or relax, but to just stop and think. All right, so my business led to, I started the business, so that's the story of how I started it. Now I want to talk about some of the foundational things that I wish I had known when I was starting the business. And to do that, I'm going to start by talking about Blockbuster. Does anyone remember Blockbuster? Okay, there's some young folks here that are not raising their hands. It's interesting. Okay, all right, well, Blockbuster was the king of video rentals. If you're not familiar how this worked, you actually had to go to a store to watch a movie, okay? You would go there, and they would give you these black boxes, okay? And then you take them home, and you put them into another black box, and then it would show up on this other black box on your screen, and you'd be able to watch a movie. Okay, but they were the king of video rentals. They had over 9,000 stores, and they did over $5 billion in revenue. They had that model down. They really knew how to manage it. But they did not see the change that was coming to their industry. So, and then to illustrate this, they had the opportunity to buy Netflix back in the year 2000 for $50 million. You think, oh, that's a lot of money. They're worth over $500 billion now. Okay, so that gives you an illustration of where they were at. They thought it was going to be a fad. So Blockbuster was excellent managing their business, but not so much in the leadership that was necessary to notice the change in their industry. And so I think this helps illustrate the concept of management versus leadership. Management versus leadership. Because management is doing things well, but leadership is knowing to do the right things. What is it that needs to come next? So even if your team executes really well, just like Blockbuster did in managing those day-to-day, if you're not working on the right activities, you might just be wasting time at the best, or it could actually make you go out of business at worst, like happened at Blockbuster. Now, changing when you shouldn't, it can also be a problem too. So we talked about not changing when you should, but changing when you shouldn't can be a problem. In fact, when I started my business, I told you I wanted to do managed IT services. So that was the model. But when a client came to me and was like, hey, Don, can you do a website for me? And I was like, I should really say no to this. But they offered to pay me in real dollars. And I was like, sure, I'd be glad to do that website for you. And another client. And soon enough, I looked a little bit like this, where I am split between two different worlds. One world is the one I want to live in, where the managed IT services, and the other world required a ton of creativity that I was not particularly gifted in, and required a lot of programming knowledge and other things that were just a great distraction to me. So here's the key point I want you to take away from this, and that is not all revenue is good revenue. Revenue that furthers your vision, provides momentum around your vision, is. So that means you have to be willing to say no to some work along the way. Now, I am not suggesting that if you don't get this work, if you can get this work, you're not going to be able to feed your family, like you should turn it down. No, okay? Like there's limits to this, but you do want to try to, over time, as you're able to, move towards what you know is going to be making you successful in the long term. Dr. Powell again brings this home with this concept of lose your focus, lose your shirt. Okay, now this delayed, I think, some of our success because in the time that I was distracted, I was not working on the thing that ultimately made us successful. You can also combat vision loss and focus loss is by having a fundamental vision for your life and work. Because if you do this, you'll be able to it'll help draw you back to what success looks like for your life. It's a fundamental vision. One of the ways that you can do this is actually brought up in a book called The 7 Habits of Highly Effective People by Stephen Covey. And he suggests to begin with the end in mind. He has a great mental exercise around this. It is a bit morbid. So it's not a bit, it's actually morbid. Stay with me on it because it's important. And that is to envision your own funeral. Like seriously, think about if you were to be a fly on the wall, think about what you would see. What do you want to see? Who do you want to be there? What are they saying about you? What have you accomplished that you're proud of? What do you regret not doing? We are on this world for a very short period of time, so did we include God in the picture? In other words, what's truly important to you? Because once we know what that fundamental vision is, we can work backwards from there and set those goals that'll get us there in the interim. All right, so let's just assume that you have your fundamental vision for your life and work. How do we execute that on a day-to-day basis? How do you execute your vision? Well, this comes down to daily habits and routines. And so don't underestimate the power of what a daily habit and routine can do for you. There's going to be habits that are positive, they're going to be helpful to you, and there's going to be habits that are not so good. Maybe you need to cut those out. So our challenge is to increase the ones that are helpful and decrease the ones that are not as helpful. And to do that, we need to create a routine. So you're going to have to find one that works for you, but here's an example of one that worked pretty well for me. One, the day really begins the night before. Have a shutdown complete where you're giving yourself enough rest. Now, I understand the challenges of rest. I was a two-time graduate of Grove City College. I get it, there's pressure there. But you, as a leader, it's really a series of good decisions over time that matter. And you're gonna make a lot better decisions if you're well rested. Just think about the time you had to take an exam when you're super fatigued. How well did you do versus what you could have done if you were well rested? So don't underestimate that. Wake up early, do some exercise. You are going to experience stress in any job, but especially if you're going to run a business, you will experience stress. You need a healthy outlet for it. There are lots of outlets for it. Choose a healthy one. But exercise is good. It's also a natural antidepressant, so there's also that. Read the Bible, pray, and be still to allow God to speak. So being able to just be open to that moment. And it can help give you perspective later on in the day. But here's one that I think was particularly helpful as well for me. And that is to write down your goals every day. Like, I'm not saying write a novel to yourself. You don't have time for that. 2 minutes or less, write down your goals. So you start with your fundamental vision for life and work. Maybe you have supplemental goals in the interim. Write down what that is. Because how many people make goals for New Year's resolutions that do not last more than a month or two? Well, one, they're probably forgetting about them, or they just kind of peter out. They just don't happen anymore. You're just like, oh, they're gone. If you write it down every day, it'll be a reminder for you. And then two, it'll embed that onto your subconscious so that as you're making decisions throughout the day, even without even realizing it, you're going to keep that goal in mind. And so having that daily traction towards the goal really makes a difference. All right, so let's just say you had a great start to your day and you got into work. I know some of you maybe not in that mode, maybe you got to school, okay. But in work, this is what I typically would see. People will come in, first thing they do, open up their email, okay? And they're just going reactive thing after reactive thing all day long. We're trying to respond to everybody, dealing with phone calls, dealing with other people showing up in their office, never doing what they know they need to do to get something done. So, what's a better way? I would recommend that you be proactive before reactive. Now, if you're working in the ER, I'm not suggesting you do this. This is not the place for that. But for most knowledge workers in the business, you are going to want, instead of just reacting to everything, come in, take out 30 minutes, 60 minutes, 90 minutes, 5 minutes, whatever you can do to just don't open up Outlook, turn off notifications on your phone, and just work on the highest and best use of your time in that moment, the highest priority thing that you have. So, but how can you figure out what is the most significant priority for the day? And then this will help. This is called the Eisenhower Matrix, and has 4 different quadrants based on the urgency and the importance of a task. I'm gonna walk through each of these. So the bottom right corner we have our time wasters. These are not urgent and they're not important. Surfing the web, Facebook, YouTube. Ben Franklin says, be always employed in something useful and cut out all unnecessary actions. And Ben's always right, so you should listen to him. He's a pretty good guy. All right, but either way, that one's just deleted. The next is the urgent but not important. or maybe less important. These might be reports that just have to be done, but they don't really add a ton of value, which is questionable why you're even doing them to begin with. But things, maybe a salesperson's calling you, trying to sell you something. To the extent that you can, you want to delegate these tasks, or automate is actually a really better way to do this if you can, especially in today's world. A lot of automation capability. Take advantage of that. If a human can be avoided, if you can avoid having a human do it, that's really good. But in this quadrant too, I'd also suggest, can we delete these tasks as well? You know, so Elon Musk has this thing where he says, if you're not at least adding 10% back of the things that you cut, you have not cut enough. And Elon seems to be doing pretty well for himself, so he might be onto something there. All right, so then there's the urgent and important. Urgent and important. These are things you just got to do. That's a deadline for a customer. There's a call from coming in from an important client. You're going to have to take these. But even here, when I started the business, it was me doing a lot of stuff, including reactive support. So a client calling in on an issue, that's important, that is urgent. It didn't need to be me forever. So again, still look at ways that you can delegate, because the holy grail of quadrants here is this top one on the right. It's important and not urgent. Important and not urgent. These are the planning. This is networking, building relationships with people, looking at different strategies, making motions towards that long-term goal that you have. Most people don't spend enough time in this quadrant because they're so distracted by everything else, all the noise that shows up. So to the extent you're able to, spend time doing this so that you're able to work on your business and not as much in it. So you want to try to delegate as much that's urgent and non-important that you can, so you can work on that non-urgent but important tasks in your life. Okay, so this is pretty much book hour with Don, but this is another one. This is The Effective Executive by Peter Drucker. Real good book, real short read, but it has a concept that's helpful in this as well, which is know thy time. We are pretty bad estimators of time. Girlfriend Lisa would speak to that as well. She knows that I'm not so good at this myself. But one of the things that can be helpful in this is to just write it down, to track it. There's a tool that I like to use called Tick. Notice that's not tick-tock. Time waster, Ben said no. All right, but Tick is okay. And it's a good task management tool, but it also will help track your time. If you need something like that, highly recommend it. All right. So now that we've talked about some of the fundamentals, I want to talk about how to actually start a business. And to do that, we're going to bring in the Steves. You guys remember the Steves? This is Steve Jobs, Steve Wozniak. Okay. So in 1976, Steve Wozniak he built this bare bones computer you see right there. And he was going to give it away at a local computer club, the schematic for it. He was just going to give it away at his computer club in California. But Steve Jobs came to him and said, you know what, we might be able to sell this thing. Let's see if we can do that. So they went to a local electronics store and talked to the owner and said, hey, would you be interested in buying this? The owner said, yeah, if you can make 25 of these, I will buy them from you. The problem was they didn't have enough money to buy the components for all that. So they sold almost everything that they could, took out some loans, and then they were able to deliver that sale. This was the Apple I, by the way. That's the Apple I. And then they took the proceeds from that and turned it into the Apple II. And that sold over 5 million units. Now Apple's worth over $3 trillion, so that's trillion with a T. That's a lot of money. But what's missing from this story? Well, they didn't have a formal business plan. They didn't do market research. They didn't wait for the stars to align or for the cows to come home. They just got started. So I'm not saying that none of those things can be valuable, but sometimes you can just get overwhelmed with information. And so this is what can generally happen. You just go, okay, yes, you're eventually going to have a lot that you need to deal with, but you do not have to deal with it right away, not right away. So a lot of times people will just spin their wheels or maybe not even attempt to do something because they see all this monumental stuff that needs to be done. But Steve Jobs, Steve Wozniak, they just saw an opportunity and they took it. So all right, we're going to talk through some practical steps to get started. First of all, this is not legal or financial advice. I feel like I have to say that. Okay. But you do, as a practical thing, I would highly recommend that you get a good lawyer to help you in your journey. ChatGPT is not a lawyer, okay? But I do actually recommend you use ChatGPT to understand concepts. It's a great way to figure things out so that you're not burning your lawyer's time explaining basic things to you. But you do want to, if you have any kind of issue around legal, you're going to want to have a lawyer help you with that. Now, we're also going to go into some technical components, more checklisty items around how to start a business, so try not to black out. If you notice your neighbor starting to glaze over a little bit, feel free to administer the elbow of justice, and we'll get through it here together, all right? But the basic business plan. All right, I was just ragging on business planning, but you do need to understand a basic mission, what your target market is, and make sure you're not going to run out of money in your first week. You do need to consider this stuff. If you're going to take funding to get started, you're 100% going to need a good business plan. They're not going to give you money if all you're giving them is a back of the napkin that says, I love money. That's not going to make them want to pay you anything, okay? But either way, if you do a basic one or more advanced, don't neglect to come back to it over time because you're going to shift your business and it will need attention. You will want to figure out your organizational structure, what you want it to be. There's LLCs, sole props, partnerships, and so on. Now, I said I wasn't going to give legal advice, but if you choose to do a sole proprietorship and any kind of serious business, that is dumb, okay? Because here's what will happen. If you mess something up and get sued, they will take your business, they will take your home, they'll take every personal asset you own, and you'll be left with nothing. So this doesn't sound like a pretty picture, does it? Okay, so instead, I would recommend, this is what we were an LLC, or something that gives you some type of protection. What's an LLC stand for? Who knows? Yeah. What was that?
Limited liability corporation.
Yes, limited liability corporation. That's right. Corporation, yeah. Company, oh, yeah. I'm glad Rich is here. Make sure I'm being honest up here. All right, limited liability company.
Corporation already has limited liability.
Correct. Yeah, correct. So either way, I highly recommend some type of structure that is going to protect the business so that you don't have someone come and take your personal items away. All right, so now you're going to want to make it official. You will want to apply for an EIN number. This is from the IRS, Employment Identification Number. And this is completely free. By the way, this is the only thing you're ever going to get free from the IRS. So please enjoy it while that lasts. Okay, I highly recommend you register your LLC. You're going to want to do that. It's not a recommendation, you have to. File.dos.pa.gov if you're going to do it in Pennsylvania. Delaware is also another good option. A lot of people like that. I was in Pennsylvania, chose to do that, so that's what we were. $125 fee on that, and pretty straightforward application process. You want to consider whether you're going to do an LLC operating agreement or members agreement. I didn't have one of these when I first started because it was just me. But if you're going to have other members or owners in the business, things go sideways there. This will help make sure it'll kind of dictate that situation so you have some coverage there. All right. So now we're going to talk about taxes. So now you can say that you listened to Don's speech and we talked about death and taxes. Really good time. You really had a good time with it too. All right, but either way, tax, I'm going to take this from an LLC perspective because that's my familiarity with it. A default LLC is a disregarded entity. Well, what's that mean? It just means that the profit in the business is going to flow to the owner's tax return. All right, so in other words, the tax isn't paid by the company, it's paid by the owners and the percentage in which they are owed it. Now, everything on a default LLC is going to be subject to self-employment tax. Well, what's self-employment tax? Well, if you have a job anywhere, you're going to pay Medicare tax and you're going to pay Social Security tax. You pay half of it if you're an employee, the employer pays the other half. Well, guess what? If you own your own business, you don't get to pay half still, you get to pay both sides of that equation, that's self-employment tax. Everything in a default LLC is going to be subject to self-employment tax. But if you do an LLC taxed as this S corporation, you still got to pay a little bit of that for something that is a reasonable salary, But anything beyond that, you can get without paying the self-employment tax. Now, this only really matters if you have more profit in the business than you would use as a reasonable salary. And I didn't have this set up for probably the first 8 years because it's more complicated. You got to do more tax returns, and it's generally not necessarily worth it if you're not going to take advantage of that. And then there's LLC taxed as a C corporation. This has the disadvantage of being double taxed. So you get the corporation gets taxed, and then if you take any money out of it, the owners also get taxed. That's not a good time. But if you are going to keep the money in the business to reinvest it, the corporate tax rate is lower, so that can be the advantage. But for most small businesses, this structure is just too complicated, and the double taxation is not great. So, that may not make sense. Okay, you will need to do estimated payments. So when I first started my business, I was talking with my tax accountant, and he told me, if you enjoyed ever getting a tax refund, you can just forget about that in the future. You will never get a tax refund again. And he was 100% right. We never did. Instead, we got to pay the government more money with estimated taxes. You're going to do that every quarter. And so instead of getting a refund, you pay money on the profit they just expected in the next year. You want to hire a tax accountant for sure. Please don't try to figure this out on your own. You pay them once a year to do your taxes for you. It's 100% worth it. I also highly recommend hiring a bookkeeper as soon as you can. So I'm taking this from the perspective you're starting out on your own and you're going to start growing the business. As soon as you can, hire a bookkeeper to do this because you don't want to be the one pushing the buttons on your accounting stuff. You want someone that knows what they're doing, especially when you start getting into sales tax and paying states and doing that properly. It's a lot of complication. But the key point in this, though, is make sure you still understand how all that works, because no one will care about your business more than you. So you got to validate your vendors are doing the right thing. And one way that I wish was available back in 2010 when I started was AI, because it's very easy to validate what a vendor is telling you, throw it into ChatGPT and say, okay, does this make sense? Or is there an alternative that I should consider? And that can help guide you to have good conversations. Not that you're relying on AI for the answer, but help guide you in having good conversations with people that are professionals in that industry. All right, so the good time continue with government and insurance. So you might need industry-specific permits and licenses. I did not need any of that because it's the wild, wild west in IT service, and that's the way I like it. So we didn't need this, but you might. There is a checklist on Pennsylvania's website where you can fill it out, and they will tell you what you might have to get a license for. You'll probably need a sales tax license because most things are subject to sales tax, and you'll need to remit that. If you're hiring employees, you'll have to register to pay payroll expenses as well. And then insurance, you're going to need general liability insurance coverage. So if someone slips and falls on your property, they get sued, you're not going to go out of business because your insurance covers you. You'll probably also, well, at least as a knowledge worker, you'll want errors and omissions insurance. So this would be like, okay, I go into a customer, I nuke their server by accident. I think intentional, probably they're not going to pay you out on this, but let's say it's accidental, then errors and omissions would cover that situation so that you don't have to go out of business in that. But you're probably going to not have a good time with that either way. And then, unfortunately, we need cybersecurity insurance these days. That's another one that's very common. Those three were the ones that are most common that I saw. All right, so finance, you 100% want to separate your personal and your business account. So have a business checking, have a business credit card. You will probably have to personally guarantee the business credit card, so don't go crazy with it, right? But that you'll have to just, because they're not going to trust you, so that you just have to personally guarantee it. You want to have an accounting tool like QuickBooks as well. Don't try to use Excel sheets and stuff like that. You do want to 100% make it professional. So get a domain, get a website. Don't use Gmail. We get all kinds of emails from people trying to sell us stuff with Gmail accounts. 100% goes straight in the trash. Make sure you're presenting yourself well. And then you can also register with Google Business Profile so that you can show up in local results. And that can be, of course, helpful. So that's it. That's a basic process to start. And now we want to think about growing the business. I'll talk about it from my perspective, because I did not have this. I'm not your sales guy. I'm not going to give you insights on how to sell. but way that worked for me was referrals. And one of the key concepts with referrals is, how do you get them? You ask. Okay, there's so many times that you might be missing an opportunity because you just didn't ask. Clients, if you're doing first of all, you got to do a good job for them, because if you're not doing a good job, they are not going to refer you. But assuming you're doing a good job for them, then you can ask them, is there anybody else that could benefit from what I'm doing? So make sure that you do that. And then also attend networking events, particularly ones that are relevant in your industry. Another good idea is, if you have clients and they are going to some type of conference, go with them. Be a vendor at that event, because if they're a client there, then you might run into other people that are in that same space and start building those networks, those relationships that can help matter as you grow your business. And then consider if you're going to hire employees. That's a threshold, and I would recommend before you do that, consider doing contractors first, because you don't have to deal with a lot of the complexity that comes along with hiring employees. So take advantage of that. We hired contractors almost throughout the entire part, but especially at the beginning. Upwork is a great place. Local contractors you can use. So it does introduce complexity if you hire, but if you want business to really take off, you're going to likely need people to help you. You have to pay payroll tax, payroll itself. You have to do workers' compensation insurance. You have to do benefits like healthcare, vision, dental, PTO, all of those things. But if you really want it to take off, you're going to need people to help you. All right, so that's the key takeaway in all this, though, is just get started. A lot of stuff can come into this, but you can figure it out. It's not that complicated, and you can get people to help you along the way. All right, so now we've talked about how I started a business, some of the fundamentals, and then how we started. So how do you build the business? And to help illustrate that, we're going to bring in some creatures that have no problem getting started. And that's an army ant. Look how cute that guy is right there. Okay, now you would appreciate having an army ant person on your team, because they're really good workers. Okay, but army ants actually have a really particular problem. And by the way, I highly recommend you go YouTube army ants in the rainforest, because they legit go hunt their prey and like small animals. It's crazy. But they have this weird flaw. Whenever they get disconnected from the rest of the millions of members in their colony, they can just go in circles. They just go in circles. And they're self-reinforcing, because they put the pheromone trail down, and they just keep going and going, and then until they die. Okay? But if you look close at them, before they die, if you look close at them, would you be like, are they busy? They look like they're making progress towards things? Yeah, you're looking close. But if you take a step back, you realize they're not making any progress towards their goals. They don't realize that they're going in circles, and they're not accomplishing what they really want. Now, would you go and pick out one ant in there? Like, you ant, it is your fault. This is your fault. Can you believe that? No, you wouldn't do that. They're just following the process, right? You can't, and I think the concept here is, in business, a lot of times people point their fingers at people as the problem, but most of the time when there's a problem, it's a process problem, not a people problem. So as I've looked back and thought about what made us successful, I think this formula helps sum it up. And that is great process plus great people plus exceptional persistence equals good results. And I'm going to start with process, because I think this is the one that is most difficult for companies, and it was the one that I personally had to learn the hard way. Because when I first started, it looked a little bit more like this. It was pure chaos, okay? I'm doing everything. I'm doing HR, I'm hiring people, I'm doing help desk support, finance, everything. I knew I needed to hire people. I needed to delegate. But the first 3 times I did this, I failed. And after the third failure, I'm like, why is this not working? And the reason was because I wasn't providing the person enough process to be successful. I was just training for a week, sending them out, and they're like, good luck, hope it works out. And of course, they failed in that situation. So I think the key concept here is that delegation without process will often fail. I couldn't expect my employees to just know what to do, and I couldn't just have them just figure it out on their own when they first started. I needed to build a process that they could then be successful with. And the other beauty of this is you can have your more experienced, highly skilled people write a process and then give it to your more junior folks to go execute it. This frees up your higher skilled people and then gives needed experience to those that are more junior. So that leverage made a big difference in my business. We also began to use a tool called Suite Process, and it is a procedure management platform. And I highly recommend that every business use a procedure management platform. Because if I had to pick one tool that made the most difference in our business, it was Suite Process, because it allowed us to systemize the way business worked. It allowed us to write the process out, not just me, other people, and they could contribute to it. We could create individual tasks for it. So for example, we'd have a process for billing, and then we have an individual task based on that template for January, February, March, and so on. And then we can execute that and know where we're at any given point in time. We also trained our employees to follow this mantra, and that was to create, edit, or follow a process. One of those three things. You need to be doing one of those three things, and as long as you were, you're doing a good job. And as part of our onboarding process, we would have them read the checklist manifesto. There's a New Yorker article that summarizes this by Atul Gawande, checklist manifesto. One of the key concepts in this is they had a study of surgeons. Now, keep in mind, surgeons are some of the most highly skilled, and these were experienced surgeons, so highly skilled and experienced surgeons. And they did a study that showed that the ones that used a checklist had significantly better outcomes than those that did not, including mortality. Okay, so if a surgeon with all of that training and experience can benefit from a process, certainly you and I can as well. What is process? Well, I'd say everything in your business is process, from vision, strategy, HR, and so on. And if you don't have a process, you still do. Your process is to wing it. But you wouldn't want your surgeon to wing it, would you? Okay, because if it's not written down, you'll often forget. You can't delegate it, and others can't contribute to it either. So let's dig into some specific processes that I think were particularly helpful, and it starts with strategy and vision. So we talked about having that fundamental vision for your life and work, and now it's time to refine that for what that's going to look like in the next year. We would follow a process from the book Traction, and it had a one-year cycle around vision and strategy planning. So we'd do that session once a year, figure out what our goals were for the upcoming year. Then we would have a quarterly all-hands meeting to talk about here are our rocks, what they would call them rocks, or goals. Here's what we're going to do this quarter. Here's our accomplishments for last quarter. Then every week, we do a weekly level 10 meeting that would discuss on track or off track for each one of those rocks. And we also followed a system called IDS, which is issue, discuss, solve. So there's a whole bunch of detail on that in the book. Highly recommend you read it. But the point was that we're tracking progress towards our goals and dealing with issues along the way. So as an example, here were some of the strategies that I found particularly helpful. I talked about the recurring revenue model. That was really important for us. It was a strategy that I think paid off for us in the end. We had a preventative strategy initially, but we doubled down on that about 8 years in, which allowed us to almost 2x the cost of our the revenue on our service. And we ended up having better conversations with customers because we were being more proactive. We're doing audits, we're doing gap analysis, having these great conversations, which turned into project work. And then that allowed us to do more of that and less of the low-value reactive stuff. So that going up the value in that situation really helped us because we're doing less of that and more of what was making a difference for the customer and for us. And then one that I actually developed in Dr. Kroot's leadership class, so thank you, Dr. Kroot, for this one. This was great. was utilizing a worldwide workforce. And you can really only do this if you have your process really dialed in. But if you do, you can create a lot of efficiency. You have a lot more options if you're talking about using the entirety of the world as a potential employee, and it improved our margins. All right, so that's vision and strategy. I want to talk about operations, and this is going to vary depending on what industry you're in, but you want to look for any repetitive task, any opportunity to reuse work, because those are the things that are going to provide a lot of value. So for example, I mentioned the proactive process a number of times. We had a checklist of things that we would do: auditing, take pictures, do all this documentation. Well, we systemized that, so the goal being that no matter who did that work, we would get the same outcome. And that's the way you want to write your processes, so that you can get those fundamentals down. And it really, when you're running a business, it's more about doing those fundamentals. So like Jim Collins puts it as the 20-mile march, continually doing it. It's rarely that heroic effort that's going to get you what you want over the long term. It's that putting in that daily work, that daily grind. That's what's going to make the difference. Because if you do the fundamentals really well, your clients will notice, and they will love you for it. And I'm actually really proud that over 15 years, we never lost a client due to performance. Okay, now I'm going to brag about that. We're still terrible about sales, okay? So we'll put perspective on that. Okay, but that was the idea, is that if you do those fundamentals really well, then the other stuff can take care of itself. All right, so finance is, of course, very important. No matter what industry you are in, every business at its core is a financial company. So as a leader, it's really important for you to understand how finance works. Okay, so, and then as from a process perspective, look for things that are going to be repetitive again. So how you do billing, how you do invoicing, how you close the books, and how you review the books every month. One of the things I want to highlight here that I think was really helpful for us was reviewing variances month over month. So first of all, you've got to make sure your revenue and expenses align in a given month, and that is a whole project in and of itself. But let's assume for a second that we do have alignment. Look for variances, so 10% high, 10% low, 20% here, and find out why. Just ask questions. So maybe you got double billed. Well, you probably want to catch that and then correct it, right? Maybe you forgot to bill a customer. Like, why is our recurring revenue down this month? The answers to those questions can catch problems and then improve your process, because you notice it, you can go back and fix it. Understand the P&L, your balance sheet, your cash flow statement. Okay? In other words, pay attention in your accounting classes. This is really important. I think Ed Breen talked about this as well. Like, he wanted to be able to, he wished he'd paid more attention in his accounting classes or took more of them, right? So, because he understands it's valuable too. Profit and profit margin are, of course, important. Profit margin is just a measure of how much value you are adding to the inputs in your business. So track that. You want to try and get over 20%. You can. That's really good. But some low margin business, you know, you're not going to be able to get to that. But if you're trying, you want to try to increase that over time, because that increases the value of your business. And one other one I want to mention is net working capital. And this is one that I was introduced to in my MBA class, so I wish I had known about it sooner. Because if you want to take distributions from the business or reinvest in the business, you need to know how much you have to work with. And if you just go into your checking account, it's like, oh, good, I have $50,000 in there. That sounds good. Well, do you? You're going to pay your credit cards off tomorrow, and it's going to cost you $49,000. So do you really have 50? No. Or maybe you're going to get $100,000 from your accounts receivable 2 days after that. Like, so do you really know what that number is? So net working capital helps answer that question, because it's going to be current assets minus your current liabilities. Current assets being your cash and your accounts receivable, minus your current liabilities being like your credit card statement and your accounts payable. That is going to be the number that tells you how much you have to work with. Now, don't drain it to zero, okay? You want to have a threshold by which you keep your net working capital at. But then anything above that, you can reinvest in the business. You can take distributions. That's what you have to work with. All right, so And I simplified networking capital for any accountants that are, want to critique that. All right, but either way, people. We talked a lot about finance and numbers, so we're going to bring this home with people. Okay, because even if you have great process, if you don't have good people working for you, then it really doesn't matter. And so how do you get good people? Well, one of the best compliments I ever received was, you guys are really good at hiring. And I think we really have to be good at hiring. And how do you do that? Well, we got to be picky. And it starts with the interview process. So I'm going to talk through a few of the questions that I found particularly helpful. But it was about 4 years ago, I had a young lady come in. She was interviewing for our reactive support position. And as she sat down, we had a good conversation, I noticed that she had a heart rate monitor on. And it was big, bold text, so I could see what her heart rate was. It was like, oh boy, this is going to be interesting. But she sat down, 100 beats per second, like, all right, a little nervous, but okay. So I asked my first question. This is the first one. Walk through your resume and tell me why you started the position and why you left. Now, in this, watch for what I would call fluffy answers, right? Where, like, yeah, they gave it an answer, but you got to dig a little deeper to really understand why. Okay, I'm not sure she liked that question because she's now at 120 beats per second. I'm like, oh boy, we're here, so let's keep going. So I asked the next question. Can you tell me about a time that was something that you did was really challenging, you were able to accomplish it, and you're kind of proud of that? Something is challenging, but you were proud of it. Now, you want to look in this answer to, did they actually do the work? And if they did, can they answer technical questions about what they did? So dig into it. Understand how much they actually know. Okay, she's now at 140 beats per second, and I'm not sure if I should cancel the interview or keep going, but like, we're all here, and she hasn't left, so we'll keep going. And ask the third question here. If you were to tell me about the last time you had a performance review. What did they say that was good, and what were your rooms for improvement? Okay, and if they didn't have a performance review, just ask about what a manager would have said about those three things. So now we're at 160 beats per second, and I am pretty sure she's going to pass out, so we ended the interview and we moved on. But either way, the point in all of this is to look for red flags, okay? And also, beyond the interview process, I highly recommend using a hands-on assessment as well. So for us, we would have them remote into a server and go do some work. They might have to troubleshoot something or do some project work, but the point is to make them do something relevant to the position, so it's not just a bunch of words that they say they can do it, but they can actually go and do it. And now, as we're evaluating people, I'd use two methods. One, compare them to our core values. Make sure that they are going to be a culture fit, because you do not want somebody that is not a match to the rest of the people. It will be a poison to the rest of your team. Be very careful about that. And then two, we used the GWC method from Traction. Get it, want it, capacity to do it. Now, just because somebody applies to your position does not mean they get it and they want it. It just means they need it. Okay, and if you hire them and they don't get it and want it, they will either annoy you or you will annoy them, and it's not going to work out in the long term. So they got to get it, they got to want it, the capacity to do it you can handle through dialogue and then also through that hands-on assessment. But the moral of all this is that if it is not a heck yes, it's a heck no. Okay, it's not like, well, maybe, and if they did X, Y, and Z, we would be able to make it. No. If it's not a heck yes, it's a heck no, because it is much easier to just say no to a candidate than it is to have to let somebody go later on. So beyond your employees, don't consider yourselves as well. As leaders in the business, find a business coach, a mentor, and peer groups. This is so important. Now, I had my dad, he was running a business, so I could bounce a lot of this stuff off of him. But there's also a great other tool called score.org. Highly recommend this for new entrepreneurs because it's completely free. And it's these volunteers that have been in industry and want to just give back. So they helped me when I was going through the process of going from an individual person to having employees help with that process. I did end up hiring a coach later on, and I paid for them. and they helped me with some HR issues I was having and some goal setting. I also had a mentor that had been in the IT industry and had built and sold a business as well. And so the blueprint was really helpful. And peer groups are really useful to just bounce ideas off of, talk shop, see what's working in other places. And most of the time, you're going to be connected with people that are not competitors, so you can feel comfortable sharing and doing things. All right, so the final P is persistence. And this means work ethic. This means working hard. Running a business is not always going to be rainbows and butterflies. In fact, it's rarely that. It is going to be a grind at times. It's going to stress you, and it can break a lot of people too. But you can get through it as well. If you have the mindset, if you're really buying into the business, you get passionate about it, those things can get you through those times. But you're going to need to work. You also need to avoid distractions, because shiny object syndrome can be a real thing. I'm particularly having problems with it. But the idea is that it's not always going to be that easy or fun project that's going to move the needle for your business. It's going to be usually the hard thing that you might be avoiding doing, but you do need to just get started on it. All right, book time with Dawn continues, because we're going to talk about Grit by Angela Duckworth. This is a great book. I really recommend you read this one, because it gives you the concept of how much you will need to work to be successful. But she has a great equation that helps bring this concept home, and that is that innate talent times effort is going to give you some skill. So someone has some native ability, they throw some effort on there, and then they get skill. Well, then you take that skill and you multiply it by effort again to actually get your results. So the point is that effort counts twice. And I would much rather have somebody on my team that is going to work hard than somebody that has a bunch of talent but then never uses it. But this is also a good concept for everyone, because you don't have to be the Michael Jordan of your industry. You really just have to work hard and put forth that effort, and that can make the difference. Gino Wickman has another concept that I found particularly helpful, and that is that thou shalt accept short-term pain and suffering, okay? And there's another concept called eat that frog. You can have a good Google session with that later. But the point is that short-term pain and suffering is way better than long-term pain and suffering, okay? So that means having a difficult conversation with an employee about performance. That means calling a customer that maybe you're not feeling comfortable about doing it, to talk about something that's not going well. Maybe it's calling the prospect, even though you know you're going to get rejected for the 100th time. You still need to put forth the effort and do it. But since we're in 10 Commandments mode, here's one of mine, and that is that thou shalt learn from difficult clients. They can really be the best teachers. When I was a young company, I had a client that was particularly challenging. He was fairly aggressive, and he wanted service at all hours of the day. In fact, when I was in the hospital with my daughter's first birth. She's here, by the way. Hi, Caitlin. Yeah, she was, it's her only birth, by the way. That was not her first birth, okay? But she was being born. Okay, I was in the hospital 24 hours. This guy was trying to get a hold of me, knew I was there, was like, I am trying to get a hold of you anyway. Fortunately, I didn't have my phone. I was up for 24 hours. Thanks, Caitlin, for that one. Okay, but the point is that that's just an idea who he was. But he gave us so much valuable feedback, aggressively, but it was good. Our invoices were actually really bad. Now I think we have some of the best invoices in our industry. Our communication wasn't as fast as it needed to be, as crisp as it needed to be. And now we have people that will answer the phone right away. That's part of our culture. They will never miss a phone call. That's part of our culture. So those early decisions and that feedback really made a difference over the long run. So getting that, even if you have those challenging customers, the question to ask is, do they have a point? Because if they do, then we got to do something about it. Now, you don't have to rely on all of your aggressive, angry, mad clients to get feedback. I also highly recommend you ask for feedback from them as well. So one of the things I would do with every customer, every quarter when I would meet with them, was ask them 2 questions. What is it that we are not doing that you would like us to do? So that's free market research right there, okay? And then 2, what would you like us to improve? What can we do better? Okay, the answers to those questions, take those back and do something with them to the extent they're reasonable and you can execute on them. And then report back to the customer like, thank you so much for that idea. Here's what we did as a result of that. They will 100% love you for that. They'll give you feedback in the future, and they will be more than happy to refer you in the future. All right. So that's process, people, and persistence. So we've talked about how to get a business going, how to build it. Well, now we need to talk about how to sell a business. So selling a business is a big decision. It's like a kid that I've raised from childhood to become a functioning adult. But everything has a beginning, a middle, and an end, and everybody exits their business one way or another. And so I do what I usually do when I need to make a big decision, disconnect from the world, disconnect from routine, and I took a backpacking trip. So this is me trying to figure out if I wanted to sell the business or not. At the end of that, I decided it was time for me to sell because when one door closes, another one can open. Now, I want to just walk through the basic timeline of a sale. Now, again, this is not legal or financial advice, but you will need a team of professionals to help you with this. First of all, you're going to need an M&A lawyer. When I say M&A, I mean mergers and acquisitions. It's a specific type of lawyer, not a generic one. You need an M&A lawyer. You need an M&A accountant. An M&A accountant is going to help you make sure the transaction makes sense from a financial perspective. You got to keep in mind in all this, especially, coming into it from the side, these are professionals, especially when you start talking about private equity companies. They know what they're doing. So you will be at a disadvantage to them because of the number of experiences they've already had. And you need some people on your team to make sure that everything makes sense. You also want a tax advisor to make sure you understand what the consequences of the transaction will be from a tax perspective. So the first step in it is preparation. And this will be the longest part because you need to get your business in a state that is sellable. The first question to ask is, who's going to take over? When you leave, do you have somebody else that can do this? Do you have somebody on your team that can step up? I was blessed with somebody that could do it, wanted to do it, and was able to transition to. If you don't have somebody on your team, there are private equity companies that will place somebody within it, so that's an option. But it is a little bit more risky, and I think that might be a harder sell for some private equity companies. Can the business run without you? Because if it can't, no one's going to buy it, not with you not there at least. So you got to make sure that you're taking steps, and a lot of what we've been talking about can help. Building out the process and delegation can build that foundation so that, and that's really what I did, is I started building process and delegated to the point where I didn't need to execute in the business from an operational perspective anymore. I could just work on the business. And even if you don't sell, that's super valuable because you can spend your time and effort trying to make the business better instead of just putting out fires and dealing with issues all the time. Generally accepted accounting practices. All your accountants in the room, I hope your hearts are fluttering on that one. All right, but you will have to get yourself in alignment with GAAP because whoever buys you almost certainly will be aligned with it. And so take steps towards that early if you can. You want to make sure you're setting up your contracts with all of your clients correctly and well. In other words, make sure all of your clients have a contract. Don't get into business with anybody without having the terms of the arrangement in place. You want to make sure it definitely has limitation of liability within because you do not want a situation where one client can end your business. So make sure you have a good limitation of liability in there. I highly recommend having an evergreen contract, at least for recurring revenue type contracts, because it made it a lot easier to not have to negotiate with our customers every year to just renew their contracts. So we made them automatically renew. Well, here's one that I think was particularly important to the success of our business over time, and that is an escalation clause. And all that is us saying that we will increase, or we can increase the price by a set margin. Now, at first we limited it at 5%, but then inflation decided to just go through the roof. And so now our contracts are 10% or whatever the inflation rate is. But the point, though, in all this is to not just have it, but do something with it every year. So we would always increase the rate, usually about 3 to 5% every year. Because if you don't, inflation will kill your business. And there are so many times I would talk with other small business owners, and they'd be like, oh, I don't know if I can do it. My clients aren't going to put up with it. I can't do it. Like, they will. As long as you do it incrementally in a small amount, we rarely got any pushback from that. Now, if you come to them and say, yeah, that's going to be a 15% increase, they are going to 100% push back on that. So it's much easier to do those incremental increases over time and get them used to it. And they're going to understand. They're dealing with the same issues themselves. And then you might need a broker as well. I didn't use a broker. There are many times in the process where I was like, I could have used one. But we were blessed because a lot of people were interested in us, and so we didn't necessarily need the sales part of that. But they do charge a 3 to 5% fee, so that was one of the disincentives of using one. But if you're trying to get in front of a lot of buyers, a broker will definitely help with that. The next stage is finding a buyer, and this is doing the initial meet and greet with the potential buyers and understanding what they're looking for. Does it match with what you're looking for? And you just go through that process. If you find somebody that you like, make sure you sign an NDA with them. Don't just start giving away all your financial information or anything related to something proprietary without some type of protection here. And then you can start having some more in-depth conversations. If they like what they're seeing, they will send you an LOI or letter of intent or something similar to that. If you want to collect as many of these as you can, and definitely don't take the first offer that you get. These are going to be professionals. They are going to try to go on the lower side of it. So make sure you're negotiating with them. This is the time to negotiate, because once you get past the LOI stage, the shift of power goes right back to the buyer, because now you're in due diligence and other stuff. So this is the time to collect from multiple people, negotiate, and get the terms that you want. This will tell you, it'll have things like the total enterprise value, what earnouts are part of the arrangement, any escrow that's in there, all of that will be contained. And critically, if you sign it, you become exclusive to that buyer until either the transaction executes or everyone's like, nope, this isn't going to work. So it's an important document, but there is no obligation for anybody to actually execute. You can walk away at the end if you're not feeling good about it or they are not feeling good about it. It is not a purchase agreement. It's just like, if we were to get to the end, this is what it would look like. Then comes the hardest part of the whole thing, and that is due diligence and contract negotiation. Due diligence, this is where they ask for the sun, the moon, the stars, the black hole in the center of the galaxy, and then they still won't be satisfied because they'll ask you for something else, okay? But there is so much that goes into this, but they're gonna look for the financial side of things from a due diligence. In other words, you gave us all of these fancy statements. Is that real? That's what they're trying to figure out. So they might have you do a quality of earnings report. They did with me. They'll definitely look at all of your contracts to confirm they look reasonable, both with your clients and with your vendors. And for us, they also did a anonymous customer satisfaction survey just to confirm that our clients don't hate us. All right, and then you're going to do the contract negotiation. If you get through the due diligence, you'll do the actual negotiation for the purchase agreement, along with a million other documents that you'll need to look at. But this is where your M&A lawyer will help you out. And then closing. Like, the closing part is actually the easiest part of the whole thing. It's like 5 minutes or less. Like, everyone's already sorted out all their issues over a million conversations, and so you just sign off and everyone is hopefully happy. The whole thing from LOI to closing takes about 45 to 60 days. Typically, it can definitely range, I would assume, but for me, it was around the 45-day mark because we were moving fast. And then from the time in which I was like, maybe I should sell the business to actually doing it, that was about 2 years. just to give you a sense for timeline there. Types of buyers you might run into, you got private equity companies, you might have independent buyers, and you'll have the strategic buyers. There's probably other types out, but these are the three I'm talking about. Private equity, there are two types of private equity that I ran into. They are the roll-up strategy. So this is arbitrage. They are going to take a bunch of small entities and turn them into a big one. And the point is that you can buy a whole bunch of smaller companies at a lower multiple and then sell them as one big company at a higher multiple. So arbitrage, they're going to get the difference between that. But the disadvantage with that, at least for me, was that they had to consolidate everyone into it. And it has a number of downsides, like losing 20% of your customers on average is what one roll-up company told me. So for me, this didn't make a lot of sense. I went with a buy and hold strategy from a private equity company. This was where it's like the Berkshire Hathaway, Warren Buffett model. We're just going to keep on this thing. It's going to operate independently, and they can continue to do business like they always had. So that one was most appealing to me. And also the company that I sold to had done a number of other purchases in my area, so I had some comfort that they weren't going to destroy and blow up the business, because I had seen that happen before as well. The private equity does not always mean better company. That sometimes can go pretty poorly. And then a strategic buyer is going to be like a larger company buying a small company for their intellectual property, like Microsoft buying a gaming studio, something like that. All right, so now the common question is, how is a company valued? Well, if you're on the stock market, you just look at the market capitalization. That's generally how you can see what they're worth. But for companies that are private, it's going to be something similar to this, and that is adjusted EBITDA times a multiplier, and that's going to equal the total enterprise value. Okay, so what is each of those components? So multiplier is really just, it's a multiple. This is not a very generic term. But it's going to be usually between something like 1 and 20. It probably could be higher, but most small business is going to be under 10. But it can definitely vary based on the size of the business, the type of business, and then I mentioned recurring revenue being important. Again, that is king, because recurring revenue means, especially as contracted, when the buyer purchases it, they have a sense of comfort that all that revenue is not going to just leave the next day. So having that reoccurring revenue makes a lot of difference. And that was one of the things that they would ask for in the whole process. And they really drilled into like, how much reoccurring revenue do you actually have? They were super interested in that. So it just gives you a sense for what the importance level is there. EBITDA, that's a fun one. You can try saying that a bunch of times fast. But EBITDA is earnings before interest, taxes, depreciation, and amortization. And for us, this tracked pretty closely to net income because we didn't have a whole lot of loans, so we didn't have a lot of interest. We talked about taxes flowing to personal tax returns, so not a lot of taxes being paid by the business. We didn't buy a whole bunch of things. We weren't asset heavy, so we didn't have to pay a lot of depreciation. And we weren't buying other businesses, so we didn't have a lot of amortization either. So for us, it was pretty close to just net income. But if you did have any of those things, you would just add that on top of your net income, your earnings, and that would be your EBITDA. There's also adjustments to go that. Well, how's that work? You really want to look for add backs. Any type of thing that you're paying for now, but the new buyer is not going to have to pay for. So for example, we moved the year before we were sold. So there was a bunch of costs associated with doing that. Those were one-time costs. It hit our P&L for 2024, but we're not going to move every year, and the owner's not going to have to do that, so we got an add back for that. Now, on the other side of it, we're paying our people through a certain platform overseas, and the new owner's like, nope, we can't use that one. We need you to use this other thing that's going to cost more money. Well, that ended up being a subtraction for us because it's going to cost more money post-sale than it did prior to. And that's the adjustment side. So that's how the whole valuation piece works. And then once you get into post-sale, that part is pretty straightforward. You just help with whatever they need help with. For me, it was a 6-month transition period. Talk with customers, talk with vendors. They might want to keep you along longer or shorter. Really just depends on what the needs are. But you're just going to adopt whatever their practices are and just help with that transition so that the new business is set up for success as much as possible. And that's really it. So I hope this was helpful in highlighting some of the areas that you might have to go through in starting, building, and selling a business. If you ever do have any questions, contact information is going to be on the last slide. Feel free to reach out, connect with me on LinkedIn. I'll be happy to be of help. And I know we saw a lot of information, we shared a lot here, but again, if you're feeling a little overwhelmed, just remember, you can just get started. And that's it. If you have any questions, glad to answer. Thank you. Yeah, so you have any, I know a lot of people were here for the Q&A before, but we talked a lot since then, so glad
Thank
to
you
take
so
more.
much for sharing, Don. I
Yeah.
really appreciate it. In the earlier part of your presentation, you mentioned how the opportunity came about that you could start designing websites for some of your current customers. Did you ever consider like the impacts of how that would broaden like the scope of offerings, or did you just see that as something that was just outside of your passion or field of interest? Could you just go more detailed into that?
Yeah, absolutely. So this was actually more of a philosophical struggle I actually had, what you're talking about here, because when I first started into that wasn't a like, oh, this is absolutely terrible. I did think there was opportunity there because initially I thought it would be a good idea to be a one-stop shop for everything technical. Like, you don't have to go through all these different vendors. I thought, it's kind of a pain to have to work with all these different companies. I can be this one-stop shop to do it. And so that was the potential idea that, if I'd gone deep on that and maybe had more resources and I could hire a bunch of people in each of all these departments, I think that could have been successful. But the reality for me in that moment was that we did not have the resources to do both. And so you got to be practical in those situations as well, not just like, well, I'm just going to like try this whole thing that if it doesn't work, it could tank the business. I didn't feel comfortable doing that. I wasn't particularly skilled in it too, so that helped make me make the decision a little bit easier. I needed to focus more on this managed IT services. And I think the thing that really sold at the end was website work was rarely reoccurring in nature, where managed IT services was reoccurring, and the value of that outweighed all of the cons of doing websites. Great question. Thank you.
When you made up your mind to sell the business, was it difficult to stay patient and wait for the right buyer? Or how did that process go?
Yeah, I think it was. But in my situation, I was fairly confident in the buyer that I wanted to sell to because they were already in my neighborhood. They had purchased 2 other businesses already in the Pittsburgh area, so I could see, 1, that they didn't implode them, and 2, that they were reasonable to work with. I knew people that were there, and they talked with, so I had some little bit of insider knowledge with that specific one. All of the other ones I didn't know as well, so I was a little bit more suspicious. So I knew that, but it was still hard to be patient through that process because it is a long, drawn-out piece, and there were ups and downs through that. There was a time in which we thought the thing was not going to happen at all, and that they were saying no, and we were like, okay, this isn't going to work, and we were able to overcome that. But yeah, going through that was definitely a roller coaster, but in the end, it ended up working out.